Hi everyone, this is Brian Neal with TradeToBeFree.com. I just wanted to give you an update about what's going on in the market right now and some of the good signs that we're seeing and kind of review how this past 2-3 weeks developed here so you can understand why we went bullish a couple weeks ago or so. And we were modestly bullish prior to that. We didn't really go bearish. We didn't see a really strong bearish signal over the past 2-3 months. So we were just pretty much cautious and just trying to pick the best trading setups throughout the past 3 months. But in the past 2-3 weeks, we noticed that there was a bullish confirmation signal that occurred right in here. And basically what that is that's a move coming off a low, a new rally it starts after a sort of prolonged downtrend. But again, in this case, we're not really in a bear market and we didn't see a really big market correction. But we still saw this move off these lows here. And then after a few days, we saw the market gap up and close very strongly. Both here and also here, and that was the first sign that this new uptrend right here was for real, would tend to hold. Okay, and one of the best places to get in after a bullish signal like that is on the next pullback. After that pullback stops and you get a candle over candle pattern. So first you see the rally attempt here, and then you see the follow through day with the real strong close of more than 1.5% above the prior day's close and above the prior day's high, and then that first pullback in here, and then that secondary move starting here, and that's a great entry point for the overall market in general, and also to get to look for really good swing trades. Now we were seeing some earnings eruptions trades starting to really take off around this time too, and a little bit before that. So we were seeing more and more earnings eruptions trading setups come up, and those stocks that gap up high, gap up a lot before the market opens. They were moving higher, breaking that pre-market high and holding more often. Okay, and we're also seeing some swing trading setups too that were real nice in this area, and especially over the past 2 weeks now. We just saw another really great earnings eruptions trade today on AAXN. We mentioned AAXN last night in the newsletter, and we also mentioned TRIP. Okay, that did okay, but I don't think it really reached its target yet. I haven't checked yet at the close of today, but it made a little move, but not as big as AAXN. We caught AAXN because we recognized the long-term trend was stronger on that than TRIP, and that it gapped high enough by the market open to trigger the earnings eruptions strategy. So today was another really good day for that strategy, and we're seeing some great swing trading moves too. And today we're seeing the Nasdaq close above this key swing point right here. Okay, and that was after it broke out of this symmetrical triangle pattern. That breakout occurred on Friday. Okay, there was some sort of lukewarm news on jobs and wages that could have been interpreted either negatively or positively. Okay, but then after the news was in and it was digested in the morning, the market rebounded very quickly and broke out of the symmetrical triangle pattern. Okay, that's further confirmation that the trend is going back to the upside. And a lot of people haven't really mentioned that. I'm not sure why, but not too many people are talking about that at the time. And now we're seeing a further confirmation by closing above the prior swing point here. Now, this was a bearish head and shoulders pattern setting up, okay? But that pattern doesn't really mean a whole lot unless it's confirmed to the downside. So if the price came down and closed below here, then that would be a bearish sign, okay? But the fact that it came back and it closed above this right shoulder is a good sign. So, we'll see where the market goes from here, but we're seeing a lot of really good swing trading setups that are really moving after hitting good entry points, okay? And I promised on the blog to show you one of our favorites right now for this week, and that's Nvidia. And we featured Nvidia in the daily alert back Thursday of last week as it was breaking out of this double bottom pattern here. Now this is a little double bottom pattern on a daily chart, okay, within a larger double bottom pattern on a weekly chart. Okay, so you get two bullish patterns here on different time frames, okay? Plus, you've got this really strong long-term uptrend on a stock with acceleration of growth recently and has a really good outlook with multiple growth drivers, okay, for in the future. So it's a really Wall Street darling right now. And right now, after it hit the entry point that we pointed out last Thursday, it's really scooted and moved, what is it, about 10% so far from the entry point. So I think the report after hours tomorrow, we took some off already, and we'll probably take some more off tomorrow because we have a large position in the three stocks to wealth newsletter on TradeToBeFree.com. We actually took some off today as it was hitting resistance up here at around 252, 254. We'd like to take some off around 4 to 10%. And we also have a very large position in the three stocks of wealth newsletter too this week, so we don't want to go overboard on one stock. So, we'll probably take the remainder of our swing trading position off before the report and keep the rest on through the report. And you'll lock in some profits tomorrow, some more profits tomorrow, and see how that report turns out because they tend to beat earnings estimates by wide margins. So it may be a good earnings gamble. Some of you like to buy ahead of the earnings release, and these stocks that tend to beat by a wide margin over and over, that are in a good technical pattern ahead of the earnings release, these tend to do really well, especially in a quarter like this where most companies are beating by a good margin. It seems like, including like most all the top stocks. So that's a good earnings gamble to play for tomorrow night. Although, cryptocurrency is the wild card there. Bitcoin had that big correction, or big crash, you could call it, from like 20,000 down to 7,000 or 6,500, I think it was. And so that may have affected the earnings for this quarter for Nvidia. So it may gap lower, it may miss or not beat by much. But I think if that's the case, if that's even the case, I think it'll probably gap lower and then close strongly, similar to what we saw with Match today. This is a stock we mentioned last night in the daily alert, and it was getting close to a good entry point in the explosive bottoming pattern. We said that if it moved above 38.25, that it would be a good entry point. Okay. Earlier, StockCharts.com had the high of the day above 38.25. Okay, but I noticed in Thinkorswim that wasn't the case, and now StockCharts.com has updated their data apparently, and now it's the price never moved above 38.25, the entry point. But this is also another explosive bottoming pattern. It actually qualifies for that, and I believe it. Not quite, but might be close enough. And if it moves above the 9 EMA here tomorrow morning, it's got this nice gap between here and the 20 and 50. So this may take off tomorrow if it gets above the day's high today. So that's another interesting setup for later this week. And I also want to show you one more too. Adobe, there's another leading industry right now. There's the medical industries, a few medical industries like medical equipment, for instance. We had ABMD make a big move. But we also have Adobe in the software industry. The software industry is making a real nice move right now, and we're seeing a few of these software companies, these top growth stocks in the space, do really well. And we had Adobe here last week, and it broke this consolidation through here late last week. Actually, I think we featured it like 2 weeks ago or a week and a half ago, right in this area here. What the stock tended to do was have these bullish candlestick patterns off the 50-day moving average. You can see that here, 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 and here. Okay, and so we saw the market turning and the bullish confirmation signal in the NASDAQ, and we knew that software was helping to lead the market, and thought that would be a good place to be. And this stock is one of the top stocks in that space. So when it created this bullish candlestick pattern, we were all over it, and we took position in here, and now we're going to sell some into this new high here and keep the rest into earnings. This may run right into earnings. Another good entry point though on this is a pullback back to the 20 EMA. This thing tends to do that or the 50, okay, as it breaks out into new highs. So the next pullback might be a good entry point there at the 20 EMA and the 50 if we see some signs that it's starting to rebound off those levels. Okay, because I think earnings is not for a couple weeks or so at least. I better check that. I can check that here for you on the site in the alerts. There's a link to the latest earnings release, but you can also go on Zacks directly and just look to see. You know, of course, they changed the look and feel. Let's see, where is the full? There it is, full company report. This might have it here. Here it is. Yeah, June 19th. So this has plenty of time before earnings. I can see this coming back down to the 20 EMA here. Okay, and have a nice little candlestick pattern off there, and then continue to rally into earnings. So we may get another good entry point in the days ahead. So I'd watch that and look for a good pullback opportunity on that stock in earnings. So, and on the downside, you know, looking at not a lot going wrong right now. You know, Match didn't hit the entry point this morning. We had a trade last week on HTHT, and we kept a tight stop on this, like a 1.5% stop on this that we had in the newsletter and the alert on the site, and hit that stop loss point right away, and then it turned around and came back and fortunately moved higher for those that, you know, kept a wider stop loss. For the explosive bottoming pattern on these stocks over $40 or $60, I should say, if it's over 60 or so, they tend to need a wider stop loss for some reason. I don't know why. The higher price stocks seem to often require this wider stop loss, especially when you have more volatility like we've been having over the past few months. So I kept this tight stop on there on that trade and figured it would either go or not get above this 50-day moving average or find resistance around there and pull back, and was liable to pull back quite a bit. So you know, just kept a real tight stop on that and did really well in ABMD, which was the other stock we featured with this ahead of earnings. And this was one of the earnings gambles we had, and this one worked out really nice. We had an entry point of just above this area here ahead of earnings, and it beat by a wide margin like we thought it would and really cruised higher. It's up about 15% now so far. So we're seeing some good action right now. We're seeing some really good swing trading action. It's been slow the past 2-3 months, and you've had to really pick your shots on the best trading setups, you know, after a pullback, market pullback, to do real well. But now we're seeing the market heat up again, and we're seeing some really good initial moves. And a lot of these will have these pullbacks down to these key moving averages and horizontal resistance levels, and then we'll see a rebound starting off those levels, and that would be a good secondary entry point if this market continues to trend higher, and I believe it will. And the long-term trend is still north. We can see the moving averages. Long-term moving averages are pretty much going the same slope upward, with only minor variations here. Okay. And even after all that volatility and all the gyrations the past 3 months, you know, we're seeing signs that the market is going out of this consolidation. So, yeah, we'll see. We'll watch it closely. It's good to see strong volume carrying it above this key swing point here. And, you know, it may come back up, might find resistance up here and form a right shoulder in a, you know, sort of larger head and shoulders pattern and come back down. So we'll have to watch it closely and see how it develops. I would expect another pullback at some point to this line here, and then have it come back and go up higher from there. That's my guess. That's generally how these work out. You know, once you see that higher low and higher high on the right side of this consolidation through here and out of this symmetrical triangle pattern, which generally is a continuation pattern. So, all right, well, I just want to give you a quick update and get over to our site. If you haven't taken advantage of our special right now, you can go to the home page, click on that special offer button, and our latest offer will be there. And also, the earnings eruptions trades are really doing well. We've had several over the past couple weeks that have made big moves, including AXN. I think AXN made a 10 to 12% move today from the ideal entry point. and we caught like 5 to 7% of that today, I believe, for real nice profit. So a lot of these are coming up. Shake Shack on Friday made a really big move out of that pattern, like 10%, 12% too. So a lot of really good day trading action and swing trading action, guys, right now. So take a look and look for really good entry points on the top stocks, and we can help you on the site. But either way, best luck to your trading, and we'll talk to you again real soon.